Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, let's take a look at the gold market. So the gold market actually shows the same performance in the Forex market. It's really tight range of trading was last week. It's just because of the really just few driving factors worked last week, and mostly it was around the political news such as negotiations of the China and United States on the tariff war and probable military escalation in around Iran, as the battleships have been sent by Donald Trump there. So we think that both factors are really weak and nothing will be with Iran. It's no conflict will be there. And speaking on the United States-China tariffs war, we already expressed our opinion yesterday in our Forex report, so you could read in detail our view on this subject, and we think that is a bit artificial moment. It's too overvalued factor that actually has significantly less value, and we think that it will be short-term impact. At the same time, we see other factors that support gold right now. In particular speaking, although the United States economy is improving, the no rate hike stands on the horizon, and that provides support. So inflation rising with relatively flat interest rates, so they stand at the same level. We think that the situation with inflation will change gradually in the United States and starts to rise, and when this will appear, that will press on the gold market. But currently, the overall situation around gold stands really positive. And also, second, that's mostly longer-term perspective. We see driving factors. That's really some political situation in the European Union and globally. That's also is changing as the overall global system of the standard value starts to changing, and the gold is taking gradually the real place that it deserves to get as absolute standard of the value. So all currencies will take the second place, and the standard of the value will be the gold, and it's gradually returning back since 1944 when the Bretton Woods Conference canceled the relation of the dollar to the gold, although the previously dollar was strictly related to the gold. And currently the situation is turning back again, so dollar is replacing gradually by the gold in the international trade, although it is this process is not obvious yet, and it's nowhere you could read about this. No legal law or something that strictly estimates this measure, but that's gradually where we are going to. And the Pax Americana world, when everything is stands in relation to the United States dollar, is starting to change gradually. So, but this is mostly the fundamental picture that makes impact on the longer-term perspective. In the shorter term, we think that the sentiment on the gold still stands positive, and gold still could continue upward action. But at the same time, we have a big mixed picture here. Why? Because from the one point of view, yes, we have the bullish trend, we have the bullish divergence. Take a look at this MACD indicator. Market stands tight at the weekly pivot, monthly pivot point, and tight consolidation, which could mean that market is preparing for the challenge and breaking up this area. At the same time, overall price action on the intraday chart stands relatively slow and heavy. The market wasn't able to pass through this resistance. Now it's just trying to do this, but it still stands below the weekly pivot. Also, we have this falling wedge, which potentially should be the bullish pattern, so the upper breakout. And it means that we need to get some hints from the intraday charts and keep an eye on the same levels that we have talked about it the last week, So on intraday charts, we have some signal levels that could clarify the direction relatively soon, depending on how market will behave there. On the 4-hour time frame chart, we have the same construction. It's a kind of the double bottom. Market stands tight at the resistance. So that's a relatively good moment for bullish context because market doesn't show deep retracement. Also here we were getting some signs of the bullish dynamic pressure because take a look, market trend has turned bearish here, but market is forming high and high lows, and it could mean that market could show the upward breakout. That's what we see on 4-hour time frame chart. Final moment on the daily, I just forgot to say about it. Here potentially, we are mentioning in the weekly report this on the weekly chart. Here potentially we could get the free drive pattern actually, guys. So that could be first drive, second, as it stands 127 from the first. And if somehow we will get the pullback right with the 1310 area, right at this point, we will get third drive that will, if we'll calculate correctly the target, this will be approximately 1253. And that lets us to complete the major ABC top OP target. Simultaneously, that could be the bullish pattern that could trigger the upward reversal. So we should keep an eye on this possible moment. So we could get upward breakout here to the 1310, but then market could turn down again. So that's one of the scenarios that we are keeping an eye on. But in the shorter term perspective, we need to keep an eye on different levels. So first of all, the 1275 lows has the crucial moment for a bullish context. Because if market will drop lower, it's below the 1275 overall construction with this some kind of the double bottom or something of that sort, it will be too deep drop for the gold, and it means that market really could turn down and reestablish downward action if market will fall below the 1275. So that's the crucial moment for the bulls. And this is the point that market should not break if it is still bullish. For the bears, it's better to wait for either completion of the upside target, so if we'll get some upward action indeed, or failure of the bullish scenario. So currently I do not see any other ways to take the short position currently on the gold market. So in the current circumstance, with the tight standing right at the resistance, when you keep in bullish context, I do not have really any desire to take the short position right now. So it's a bit early. For me, it seems it's a bit early. Bulls could try to catch some intraday patterns, maybe some upward continuation patterns, like such kind of this guarded steeple to buy or something of that sort on the intraday charts, but they need to keep an eye on these lows. Or they could wait for the breakout. So for example, if market shows the breakout, you could try to take on some pullback there after the breakout will happen. There's two ways to act for the bull traders. On the hourly chart, guys, next week, although it's a bit losing the shape, comparing what we saw last week, but still this has the shape of the hand shoulders, and overall upward action looks very choppy and stands inside of the major sell-off that has followed. So on the next week, we need to keep an eye on this shape, because if market will start to work with these hand shoulders, it could mean the failure of the major bullish setup, because in this case, market definitely will drop below the 1275. That will be not good moment. Or conversely, if market will continue climbing high and approaching to the top or raising of these hand shoulders, it will be a clear sign that upward action will continue and we will get the breakout on major resistance. So that's what we will do on Monday. It's actually to watching for this particular pattern. That's the overall situation that we see right now in the gold market. So in 2 words speaking, bulls, until market stands above these lows, could try to get some position on some bullish continuation patterns or on the breakout or clear signs of the failure of this pattern. Market will start breaking above this top. Bears should do nothing until they will see clear signs of weakness. First of all, it's possible forming on the hand shoulders breakout of the 1275 area. Second, if this will not happen, the market will continue upward action. We need to wait when the upside targets will be completed, even maybe right till the 1310 area. So that's our position on the gold market right now.